If you are over the age of 65, there's a good chance you are overpaying 4 different bills every single year. And the programs that could fix that are real, they're legal, and right now they're sitting unclaimed. Most of your neighbors never apply for a single one of them. So in the next few minutes, I'll walk you through all 4, and I'll show you exactly how to check if you qualify. Quick note before we start. This is general information, not tax or legal advice. The exact rules and the dollar amounts depend on your state, your county, and your income. So treat this as your starting checklist and then confirm the details for where you live. All right, let's start with the big one, the bill almost every homeowner overpays: property tax. For a lot of retirees living on a fixed income, this is one of the largest bills of the entire year. And here's the frustrating part. It tends to climb, even when your income doesn't. So here's what your county doesn't advertise. Most states offer some form of property tax relief made specifically for older homeowners, and it usually comes in one of 3 forms. The first one is an assessment freeze. Your home's taxable value gets locked in at a set point, so even if home prices in your area keep rising, the value your tax is calculated on simply stops climbing. The second one is a homestead exemption for seniors. This knocks a chunk of value off your home before the tax is even calculated, and that directly lowers your bill. The third one is a tax deferral. In some states, qualifying seniors can postpone part of the bill until the home is eventually sold. Now that one needs more thought, so look at it closely before you choose it. Now here's the catch, and this is the reason most people miss out entirely. These programs are almost never automatic. You have to apply, usually just once, and very often there's an age requirement, an income limit, and a deadline that quietly passes by every single year. So here is your action step. Search the name of your county, plus the word Senior Property Tax Exemption, or go straight to your county assessor's office or your tax collector's office and ask them one simple question. What property tax relief programs am I eligible for as a senior, and what is the deadline to apply? That single phone call can be worth hundreds of dollars, sometimes more than $1,000 a year. Number 2 lives right on your federal tax return, and turning 65 unlocks more of it than most people realize. There are actually 3 separate layers here, so stay with me. Layer 1 is the regular standard deduction that everyone gets. For 2025, that's $15,750 if you're single, and it's $31,500 for a married couple filing jointly. Layer 2 is the part that people skip. It's the additional standard deduction just for being 65 or older. For 2025, that is an extra $2,000 if you're single, or it's $1,600 per spouse who is 65 or older on a joint return. And you claim it simply by checking the age box on your Form 1040, or you can use Form 1040-SR. That's the version built for seniors with larger, easier to read print. And Layer 3 is brand new. Starting with the 2025 tax year, there is an additional $6,000 deduction for people 65 and older. That's $6,000 per qualifying person. So it's up to $12,000 for a married couple where both spouses are 65 or older. And here's the part that really matters. You can take this whether you use the standard deduction or you itemize. Now, it does start to phase out once your income climbs past $75,000 for a single filer, or $150,000 for a couple. And married couples do have to file jointly to claim it. As of right now, it's set to run through the year 2028. So put all of those together, and many retirees can shield several $1,000s more of their income than they ever thought possible. That's money that should never have been taxed in the first place. So here's your action step. When you file, make sure your tax software or your preparer has your correct date of birth. And make sure they have actually applied the age-based deductions. Don't just assume that it happened. Ask them the direct question. Did we claim the additional senior deductions that I'm entitled to? Number 3 is for anyone whose healthcare costs have crept up over the years, which, let's be honest, is most of us after 65. If you itemize your deductions, the IRS lets you write off your unreimbursed medical and dental expenses. But, and this is the key, only the portion that goes above 7.5% of your income. Let me make that real for you with a quick example. Let's say your adjusted gross income is $40,000. 7.5% of that is $3,000. So the first $3,000 of your medical costs doesn't count. But every qualifying dollar above that line can be deducted. And the word qualifying is broader than most people expect. It's not just hospital bills. It includes your health insurance premiums, your Medicare premiums, your prescriptions, dental work, eyeglasses, hearing aids, and certain medical equipment. It even includes the mileage you drive to and from your appointments. For 2025, that's 21 cents for every mile. So here's the strategy that most people miss. In a year with a big expense, like a major dental procedure, a surgery, or a new hearing aid, those costs can stack up fast. And they can push you over that 7.5% line. That is the year when itemizing may finally beat the standard deduction. So here's your action step. Keep every single medical receipt for the year in one folder. It can be paper or just a photo on your phone. Then at tax time, add them all up and compare itemizing against the standard deduction and take whichever one is larger. You only find out by doing the math, so do the math. Number 4 helps with a bill that hits the hardest in the dead of winter, and again in the peak of summer, your energy bill. There is a federal program called LIHEAP. That stands for the Low Income Home Energy Assistance Program. It helps qualifying households pay for their heating and their cooling costs. And in many places, it can step in fast if you've already gotten a shutoff notice. Now, there are 2 things that people don't realize about it. The first is that this money does not have to be paid back. And the second is that both homeowners and renters can qualify. The program is federal, but it's actually run by your state, so the income limits and the application windows will vary. Often, it's aimed at households at or below 60% of your state's median income. And here is the senior advantage. Many states let people 60 and older apply early. That's before the general public, when the funding is still full. One important reminder here, keep paying your utility bill as best you can while your application is being processed. That way, you're not at risk of disconnection in the meantime. So here is your action step. Search the word LIHEAP plus your state's name, or start at the government's energy help page. That's usa.gov/help with energy bills. And beyond LIHEAP, ask your own utility company directly whether they offer a senior or a fixed income discount, because many of them do, and they rarely ever bring it up unless you ask. So there they are, 4 bills that you may be overpaying right now. Your property tax, the deductions waiting on your tax return, your out-of-pocket medical costs, and your energy bill. Not one of them is a secret trick. They are real programs. You just have to claim them. Every single one of these is worth checking before you file or pay another bill. I've put the official government links down in the description, so start with your own state and your own county. And if this helped you today, do me a favor. Give the video a like and subscribe, and I'll keep finding the money that the system makes you go looking for. I'll see you in the next one.